Hello, you're watching The Big Story with me, CAUSEWAY. Subscribe to the Straits Times channel to stay up to date with our live news updates. Now, we'll still have to pay more for things in Singapore, with core inflation holding steady at a 14-year high. Core inflation excludes private transport and accommodation costs and reflects the expenses of Singapore households more accurately. February's figure going up to 5.5% year-on-year, unchanged from January, but still the highest since November 2008. This, as lower services inflation was broadly offset by higher inflation for retail and other goods, as well as electricity and gas. Meanwhile, led by lower private transport inflation, headline or overall inflation slipped to 6.3% from January's 6.6%. Authorities are maintaining their inflation outlook for 2023. Headline inflation within the official range of between 5.5 to 6.5%, and core inflation at between 3.5 and 4.5%. These estimates take into account the GST increase from January 1st. Meanwhile, most of Singapore's stocks opened lower this morning, following the US Federal Reserve's move to hike interest rates by 0.25%. Despite making a slight recovery just before markets closed, most of Singapore's stocks closed the day at a slight dip. All major banks and indexes here ended the day in the red. While hiking rates for the 9th time in a year, the Fed indicated that it's on the verge of pausing further increases in borrowing costs. This after the recent collapse of two US banks. Many analysts have pointed out that the relentless rate hikes are among the factors blamed for the biggest banking sector meltdown since the 2008 financial crisis. Fed Chairman Jerome Powell attempting to reassure investors about the banking system, but admitted that it's too soon to tell what they might need to do moving forward.
Our banking system is sound and resilient, with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools, as needed, to keep it safe and sound. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate.
Joining me now is Vishnu Varathan, Mizuho Bank's Head of Economics and Strategy for Asia and Oceania Treasury. Thanks for joining us today, Vishnu. So let's look first at Singapore's core inflation, which, as we mentioned earlier, is unchanged at 5.5% in February, rising at the same pace as in January. But overall inflation eased to 6.3%. Are these signs that Singapore may be on the way out of the inflationary pressure woods?
Well, I think they are encouraging signs that inflation might be peaking and it should start to subside. But as we've learned, from the experience of the UK and as with the worries elsewhere, inflation could continue to be somewhat volatile, and I think more worryingly, some components could be stickier than others. So that certainly we'll have to watch how certain global trends pan out. Things like the transference of inflation from goods to services, how that has got a second round impact, whether or not these come through. But for now, it is encouraging that some of the inflation has come off. I think it is premature to make a call for the reasons cited earlier, and also for the fact that the Singapore dollar was fairly stronger going into the end of last year, early this year, and oil prices also came off. So hopefully these trends sustain, and we will see inflation turning lower on a more durable trend basis.
Now, you mentioned global circumstances. Let's move on to the US Fed rate hike. So is it surprising that the Fed decided to raise interest rates, especially given the recent collapse of two US banks, Silicon Valley Bank and Signature Bank, as well as the Credit Suisse's takeover? What repercussions or impact can we expect on Singapore?
Yeah, so to start off, I'll just address the Fed's decision first. So it was a 25 basis point hike. And I think in the run-up to the meeting, before we saw the problems with the Silicon Valley Bank surfacing, a lot of the bets were mounting on a 50 basis point hike. At the height of the turmoil in the banking sector, we saw that dropping off to a suspension of hikes, that being the expectation. The Fed, I think, held a fairly steady hand, delivered the 25 basis point hike. There are two ways to look at it. One is, I think the Fed continues to stick with its core argument, which is they've done quite a bit so far. Inflation, however, remains worrisome, not too elevated for comfort. So they're feeling their way through further hikes, which completely squares with a calibrated 25 basis point move. The other angle to this, of course, is the fact that had they not gone ahead with this as they had telegraphed and instead suspended it, they could have inadvertently and unwittingly unleashed further fear if markets perceive that as a sign of worse to come in the banking sector. That said, I think going ahead, the decisions become more difficult because the tensions between addressing price stability and keeping an eye on financial risks, these things grow. For now, I think we can agree with the ECB stance that this particular policy decision did not and require a significant trade-off between price and financial stability, but surely the evolving situation in the financial sector could possibly see the Fed stop a little ahead of time. One giveaway is the fact that the so-called dot plot, the median rate hike that the Fed had telegraphed, earlier in the run-up to the meeting, there were strong signals that they will revise this further upward from the December, the December guidance, but that was not done. So they held it steady, and I think that speaks to the uncertainty and around the circumstances and how fluid decisions will be going ahead.
So Vishnu, taking into consideration then today's inflation figures and the Fed rate hike, do you expect the monetary policy in Singapore tightening at the Monetary Authority of Singapore's meeting next month?
I think, so just bringing together what we've said, in terms of the inflation trend, I think it's headed the right way. There are encouraging signs. And the other thing that we need to take note of is Singapore's monetary policy is conducted via the exchange rate mechanism, which is somewhat different to the interest rate mechanism. So, comparing lockstep moves may be somewhat misguided. And I think that the most critical component of this is the MAS had front-loaded a lot of tightening, an unprecedented triple each of steepening of the slope, as well as the so-called step appreciation of the Sing dollar. So in view of that, in view of the turning inflationary trend, the front-loaded moves, and some of the growing risks in the financial sector, I think that just underpins our pre-existing notion that the MAS need not tighten further at this point. They probably have the space to watch for the time being.
Thank you for your valuable insight, Vishnu. This has been Vishnu Varathan, Head of Economics and Strategy for Asia and Oceania Treasury at Mizuho Bank.
Thank you for having me, Sven.
Ahead of TikTok's CEO, Singaporean Chew Shou-chi, testifying in the US Congress later today, a group of its content creators gathered outside the Capitol to protest against calls for a TikTok ban in the US. Some saying that the app has helped them build their businesses. Mr. Chew is likely to face questions on TikTok's relationship with China, what data it collects, and what it does with it. He'll also be quizzed on why journalists were spied on by ByteDance employees, something TikTok has already admitted. And be prepared for longer waiting times and heavy traffic along the Causeway this weekend, because it's the start of a 4-day weekend in Johor thanks to 2 state holidays. While traffic flow as at 5 p.m. today seems to have normalized, motorists can still expect the drive into Singapore to take up to 50 minutes. Within Johor, police will deploy officers at major roads and highways to ensure smooth travelling. And those are our top stories for today. Visit straitstimes.com for more news and our YouTube channel for more videos. Subscribe by hitting the red button below. I'm CAUSEWAY and I'll see you tomorrow on The Big Story.